Jared, thanks so much for joining the podcast to talk about your recently released book, The Mental Game of Trading. I just like to sort of my first question. We've seen a massive focus towards sort of the mental game and mental coaching drastically increasing over the past sort of 10, 15, 20 years in sports people and high performers. So I'd like to start by asking, why should high performers care about mastering their mental game?
Because they want to win. I mean, at the end of the day, the subtleties, the edges for what, can kind of hinge winners and losers in competitive arenas, can be very fine. And if you don't know what they are, or where, you can get tripped up, then it'll cost you. And then obviously within the sphere of trading and investing, if you're not really aware of the ways in which your mind can create kind of biases and false perceptions of what you're seeing, then you're kind of at risk of making some pretty poor decisions in either direction, right? It can be kind of too fear-based or too, kind of angry or overconfident. It can also get too greedy, and so there's lots of directions with which your mind can kind of lead you astray. And if you're not aware of how that occurs or in what way that occurs, then it's going to cost you.
Yeah, definitely. I think we're seeing it, like people are becoming obviously more competitive. You look at someone like, let's say, LeBron James. There's this famous story. He spends like $1 million a year on his body and, looking after himself. So I think that's what we're seeing, aren't we? That there's just so much more competition for fewer spots, that people are doing, working harder, doing whatever they can to get to those spots, aren't they?
Well, there's so much money involved. I mean, so, I look at, I came from the golf world. So, Tiger comes along, and it wasn't just that he, was a physical specimen and a mentally, but he brought a lot of money to the game, right? You look at the purses and the amount of money that people were playing for back in 1997 when he turned pro. I mean, I think it's like maybe 7 times as much, 8 times as much now. The size of the purses, plus then the sponsorship money. So, yeah, I mean, if you were going to be, okay, top 50 golfers in the world, back in the day, they did not have a chance of winning, most major tournaments, even though they were in the top 50 in the world. Today, anybody almost in the top 100 can win a major tournament. Not always, but the point is, right? Yeah, the player pool is so much deeper in terms of the amount of people that are vying for it. So I don't necessarily think people are more competitive. I think the arenas are more competitive just because there's more people trying to get in there.
Yeah, it's like the supply and demand. And I think we're seeing it, like in the
Yeah.
past, it was obviously the top 10 would make a lot of money and the rest would struggle. But now, if you're in the top 100 plus, you're pretty well off. I think I saw a tennis player who was below the top 100 and they'd made like millions of dollars
Yeah.
and they were quite young. So we're seeing that, aren't we? That, as you said, it's just so much lucrative.
Yeah, exactly. And obviously I've been involved in esports as well. And so here, here's like a new industry that, kind of really kind of breaks open in the last, 4 or 5 years. And, you have players making millions of dollars. You've got, Ninja making maybe hundreds of millions of dollars.
Yeah, I think he had a contract for like 30 million that, yeah, with Microsoft. But so yeah, so you sort of mentioned there how obviously you're a mental game impact performance coach. You started in golf yourself, and you've also wrote a book about poker. So how did you get into trading?
I mean, a lot of traders started picking up the poker book, and that included some institutional traders, and so I started getting new trading clients, and getting feedback from traders that basically just said, you change the word poker to trading, and you've got a book, and it's not really in my nature. So I kind of spent kind of 8 years in the industry, learning a lot more about the nuances of what actually makes poker and trading different. Obviously, there are a lot of differences, even though there are a lot of overlaps. I mean, I think poker and trading are very, very unique industries in that, you're not going to see a lot of, the kind of luck and short-term variance that you'd see in golf. I mean, the equivalent of in golf, I often say is, imagine hitting, a perfect drive down the middle of the fairway. It hits a sprinkler head and goes out of bounds 4 times in a row. It's like, now there is luck in golf, and there is more luck in golf than there are in other sports, at least in my mind. But that amount is just, it pales in comparison to poker and trading. So, there's a good reason why a lot of traders have some poker background, and, and vice versa. So yeah, long story short, there was so many parallels and overlaps that were kind of found by the market themselves. They kind of came to me saying, hey, let's look at this. And I spent 8 years, and specifically like the last 3 years, really writing the book and diving kind of deep into it, researching people kind of outside of my normal client base to make sure that the methods and the things that I was espousing in the mental game of trading really was ripe for that audience.
Yeah, definitely. I think if you compare it to golf, like say if you have a few bad shots or a bad tournament, it's okay. There's another one. But in trading, it could wipe out your account if you were, that bad. It's something that it's hard to bounce back from. So I guess that's another thing as well.
Yeah. I mean, it's in that respect, it's actually easier to kind of blow your account than it is as a poker player. There are kind of more safeguards involved. As a tournament player, it's not like you can't just like put your whole bankroll on the line. I mean, unless your bankroll is small enough. But most poker players, are not, don't have easy access to $100,000 to $200,000, buy-in events. They do exist, but for the most part, it's a lot easier to kind of blow your entire account than for poker players too.
Yeah, definitely. And then that 8 years that you sort of learned trading, was that through coaching people or actually going in the industry? How did that occur?
Yeah, it was coaching people. It was, I worked with an institutional firm. NDA doesn't allow me to say who, but, working with, 40 to 50 of their traders over a 5-year span, in lots of different capacities, doing some webinars and some speaking engagements with some trading outlets. And and then, talking like kind of hundreds of trading clients that I've worked with, over that time frame.
Yeah, well, so obviously a lot of background to that, and
and obviously I've read all the other, kind of trading psychology, material that's out there, and a lot of it is good. I mean, I think, my book, there's a need for it, right? There's a space in the marketplace that, is filled by it. I think by and large, the way I would describe it, I think a lot of the feedback that I'm getting from it is that it kind of provides a lot of the practical advice. You can read Trading in the Zone, you can read trading psychology and some of the other books that are out there. And there is very good perspective and advice there, but where it kind of falls short is the like kind of how do you actually apply it? How do you take those ideas and kind of translate it into some meaningful change and removing greed and anger and fear and issues like that from your trading?
Yeah, and I guess that's where your experience of teaching and obviously coaching others has come to, because you've had to make these systems that people can not easily, but they can implement to sort of improve.
Yeah, exactly. And I'm not a trader. I'm not a poker player. I'm not, I wasn't an esport athlete. I mean, I'm a golfer at heart. So I understand that game at a high level. So to provide, the kind of, hard hitting advice in an industry where I'm not actually operating, means that I've got to have something up my sleeve.
Yeah, definitely. So obviously we'll go to the book now. So a key part of it is emotions, and it's mentioned throughout. And oftentimes you sort of, especially some traders and sometimes in high performers, put a negative connotation on emotions. But you sort of say that that's the wrong approach. Can you talk us through that a bit more?
Yeah, I mean, well, first off, we're human, right? So emotions are a fundamental reality. But I think if you can start to spin it the other way and understand that emotions really can be a helpful guide. So in their purest form, right? If you're not having your own biases, illusions, flaws kind of imprinting into the market, and instead you're able to be more of like a pure sponge absorbing, the action and being able to find opportunities, then if you experience something that we'd call fear, that might actually be an indication that the market is probably not great for your strategy, for your system, that the positions that you have on maybe are at risk or a greater risk than likely. So it's almost like, the emotional system can be a form of intuition helping to kind of guide you. And if you get really excited, the opposite can be true too, where you're like, wow, things kind of click and you can see, massive moves before they kind of occur. That's hard to do, right? To get to that point where you have enough competency first and foremost, and then have, to be relatively kind of free of a lot of those biases. But for most traders, right, the reason we're going to change our perspective is because you are experiencing anger, right, when you get stopped out in unfair ways, right? Or, positions that, should be winning or not, or the markets are not, kind of not right for your condition, and you're unable to kind of not sit on your hands. There's like too much of an itch to get in and an urgency to make money. FOMO and greed kind of blind you and make you jump into spots that you wouldn't normally, but you see other people making money and you're not. It's like all of those things, right? They are uncontrolled until you're able to kind of take those as signals, right? And then start to deduce and figure out what's behind them, right? We're not going to just try to whitewash and kind of, remove the emotion without actually understanding what's causing them, right? To me, I think it's a bit like trying to pull a weed out. If you don't get the roots out, that sucker's going to grow back. And so a lot of traders deal with this sort of short-term delusion that they think they're in full control of their emotions until shit hits the fan, right? And the emotional system compromises higher brain function and you lose control. You do things that you know you ought not to. Now, why does that happen? It happens because the emotional system has the power, right? This is super, super important, not just for trading, but I think for life. The emotional system has the power to shut down the part of the brain responsible for controlling it, right? It's in the prefrontal, it's in the frontal cortex, and it, you know, it's sort of this kind of messed up thing that in the brain's architecture, right? That the thing responsible for controlling it can be shut down by the thing that it's all messed up. But we have to work within those limitations. You cannot allow the emotional system to get too overactive, because if it does, you have no choice but to do some dumb things. Now, the way around that is to build more awareness and recognition of those early signs. So we're not going to just pretend that these emotions are not problematic. We're instead going to look more closely at them. We're going to map them, right? In chapter 2, that's the entire chapter is dedicated to better understanding and better seeing, you know, what it looks like when your emotions are rising. Because if you can catch it early, you've got a chance at stopping it. And more importantly, you've got a good chance of understanding what the heck is driving it. And then you can actually start to kind of pull those roots out by correcting the underlying flaws.
Yeah, awesome. And I guess the issue is it's different for everyone. And I think, you know, some people that might be deeper flaws and, you know, deeper sort of weeds, as you said, and deeper roots than others. So I guess that's a challenge that they have to overcome, to actually go deeper and try to find those insecurities or those issues that they're having to fix it.
I mean, yes and no. So I think by and large, it's easy to think that the underlying flaws have to be personal, but the entire book is dedicated towards, you know, 30 of what I would call these performance flaws that include, you know, high expectations or, you know, perfectionism, you know, illusions of control, illusions of learning, confirmation bias, expecting to make money from every trade, right? There's lots of these kinds of performance flaws that can have absolutely nothing to do with your prior life, right? They just kind of have to do with these like faulty ways that we see ourselves, see the world, see trading, right? That may not have really even been exposed, you know, in your day-to-day life, right? Like there's something about these performance environments, right? Poker, trading, golf, etc., that just kind of unearth and expose these underlying weaknesses. So, you know, most of my clients, you know, they're often surprised. They're like, wow, like I'm not, you know, overconfident by nature anywhere else in my life. No one would say that I'm arrogant, right? And yet, you know, when I'm making a lot of money, I think like it's like my head explodes and I'm just like in the clouds and I can't control it. So where does that come from? Well, it comes from, you know, some belief about their own potential, right? And now all of a sudden, you know, trading is this place where they're actually fulfilling their vision of what they see for themselves. And yet that view of potential is too static, right? They see this one trade as being predictive of the rest of their career, and they're not seeing that the potential is something that continues to evolve and grow, and there's going to be more ups and downs. And so, you know, it just, in those moments, you kind of lose perspective a little bit. And so, no, it doesn't have to be these deeper personal issues that get unearthed. Yes, that can be the case. But with the majority of the people that I work with, and frankly, I think the majority of people listening to this, don't start there, right? Assume that what you're dealing with is a performance issue first. You know, use the book as your kind of diagnostic tool to find what those are. And then, you know, after, you know, 3, 4 weeks, 5 weeks of working at it, if you're not seeing any progress and you start to kind of have an idea that, yeah, you know what, I didn't realize it actually had a lot of high expectations for myself. And now I can start to see where they're showing up in the rest of my life. Now you've got an indication that, all right, like if this thing exists everywhere in your life, it's probably personal and not just trading related. And so now you'll have an opportunity to cross train and kind of work on this thing in multiple arenas.
Yeah, definitely. And would you say these things are sort of, would they be cultural to the industries or to high performance or maybe societal? What would you, I don't know if you looked that deep into it.
No, I think they can be all of the above. Sometimes they're even developmental, right? You know, as kids, we often kind of believe in like fantasy and illusions and wishes. And sometimes as adults, we can kind of harbor some wishes that, like a wish that we could, you know, profit from every trade. And, you know, as a trader, you think like, all right, well, that's illogical. I know that's not possible. And yet, you know, that like mysticism in the world can kind of predominate even into adulthood. And so, yeah, like we're not going to say that's like a real deep personal issue. It doesn't show up anywhere else in their life, but like, okay, yeah, sometimes we kind of get caught, believing in Santa Claus as a trader.
Yeah, definitely. I think sometimes, I know I've experienced myself, I'm quite young and obviously you want to be successful. You think it goes like, it's the classic chart. You think it goes like that, but it's up and down and, that's sort of the journey. And I think it's quite common in almost everything that we do, isn't it?
It is, yeah. And so, what you're also now expressing is this maybe like an overly fixated attention to results versus like really understanding what it means to develop competency, right? Because that can be more of that upward sloping chart, or maybe even a little bit parabolic, right? In a sense that you can really kind of level up if you're progressing in the right way. But if you're overly focused on results as your way of defining your competence, especially in trading, it's super easy to be biased in either direction, right? Thinking you're shit or thinking you're, the next Buffett.
Yeah, definitely. I think, talking about Buffett, it's all about the compounding, isn't it? And it's with anything, the longer you do it, the better you'll get.
Yeah.
We'll sort of go into greed. So greed is obviously a major focus in the book. And I'm guessing it's probably its obvious impacts on emotions in trading and investing and probably poker as well, I'm sure. So why is greed so impactful on our emotions?
Well, I think before we look at the impact of greed, we have to fully kind of understand like what it means, because it's sort of a contradiction of terms if you think about it, right? As a trader, your job is to make money. So to be greedy means that you're seeking to make more money. It doesn't make a lot of sense, right? So to me, greed is basically just this excessive ambition, this excessive drive to make money in a way that actually costs you money, because now you're making decisions that are suboptimal, relative to your own strategy or system. And when we look at it in a performance-based way like that, then it becomes no different than the poker player who is trying to go all in a spot where they ought not to, the baseball player who's trying to turn a double into a triple. Like, but it's kind of up to them to understand like whether or not it was actually like a calculated risk, right? Because there's no rewards in any of these endeavors without the risk, or whether it was actually just like, no, you do this, 99 times out of 100 and you're getting thrown out at third or you're losing money here. And so if we kind of put away the societal connotation about greed and just look at it as a performance problem, then we can start to understand that greed actually is not the faulty emotion that many people think it is. When we peel back the layers, there's not a lot of, individual flaws that create greed. Really what we're talking about is anger, fear, overconfidence, or lack of confidence. And all of those issues can produce these sort of flashes of greed where you're going to violate your system. And, I talk about in the book, there's 4 traders who are highlighted who every single one of them checked the box that said, I have greed as a problem. And when we started to peel back the layers, that was not the case, right? Yes, on the surface, they felt greedy, but only because society had kind of created that bucket, and the trading society and culture had created that bucket and said, you doing this is greedy. And to me, it's a very kind of shorthand, lazy way of analyzing, because the greed is not the problem. The problem is, no, actually they had, deeper fears of losing. So they were seeking out these outsized profits as a way of counteracting the fear of losing, or the fear, that they were going to fail, or they had super high expectations of themselves, right? And so the greed was, well, if I miss out on a opportunity, it means that I'm underperforming relative to my expectations of myself. So yeah, I think by and large, the way that traders, investors think about greed is just flawed from the outset. And if we can kind of really kind of recontextualize and understand what the heck we're talking about, then the greed fear index is really just like a nice thing that the media talks about, but us on the inside know that it's bullshit.
Yeah, that's really interesting. So it's like we almost overcomplicate it, and we try to, and I think it's something we try to build these narratives behind these certain words or these certain things. And you're just saying, as you said, peel the onion back, see what's actually at the core of these issues.
Yeah, and you're right. My goal is to simplify things. I think by and large, traders who don't do this rigorous work on the mental game, they're not complicating things enough. But once you kind of enter this world, right, it will feel a little bit more complicated because it's like learning anything new, right? It's just going to, you're aware of more things that you didn't know before. But as you start to work through it, it should actually make things a lot more simple. And greed is a prime example. Let's get rid of this sort of excess, fluff, and, kind of slack in the system, and make things more efficient. Make your diagnostic process for correcting these problems, easier.
Yeah, definitely. And you sort of talked about there before about sort of mapping your emotional patterns. And can you just talk about this a bit more? I know it's, explained very well in the book, but if you can just give a quick overview.
Yeah,
I don't want to give away all your secrets.
No. I think this is for anybody that wants to kind of just start this process. I mean, you can't stop what you can't see, right? Is the basic premise, right? And so you have to be able to identify the thoughts that come to mind, the behavioral patterns, the changes in your decision making, the situations in which these things are occurring. And the easiest way to start is like, just look at the mistakes that you're making, right? Whether or not they're super obvious and they're the boneheaded mistakes that you're making, or the ones that are maybe a little bit more marginal, maybe happen a bit more infrequently, but yet you still know that they're causing some losses. So start with those, and then kind of start asking yourself the questions of, all right, well, why is this actually happening, right? It's so easy to just say, don't do that, right? I know better. I'm not going to do that again, right? And maybe for a couple of days you don't, and then, for another reason, right, you just forget about it, and then it pops back up again. So instead of saying, don't do that, say, all right, why is this happening? And when you start to ask, why is that happening? Then you start looking for the patterns that exist around those issues. And the good thing is that these patterns happen in predictable and consistent ways. You have similar thoughts, you have similar underlying emotions, you have similar actions and physical sensations. Again, changes in your perception of the market, or your positions, etc. And when you start to actually like write those things down, right, you can then find more of them and more of them. And, it really starts to kind of level up. And all of a sudden now you have a very detailed map of the earliest signs of greed or fear or anger or confidence issues, and then be able to kind of see as they scale up, as they get bigger and bigger, because they accumulate. Typically, people are not aware of those very early signs, right? They're not aware until the problem occurs. Well, guess what, right? The roots of your fear, right? The hesitation you have in this position, it actually started, the prior day when you lost out. And now that loss, kind of stung enough. And you're now all of a sudden beginning to kind of think like, oh man, I don't want that to happen again. I really need to be extra cautious or careful. Like I don't want to lose again. The thoughts that kind of start to snowball, again, they happen in predictable patterns, but we don't take the time to step back and actually write them down. We think that we're capable in the moment of just stopping it. And that's just not the case. I mean, anything worth doing requires some training. And so mapping your pattern, right, takes some time, takes some practice to really look at it closely. But I promise that if you do this, you will see more details, and it will give you the ability to stop things before they happen.
Yeah, definitely. So you'd say it's sort of like a snowball rolling down the mountain or something. And it gets bigger and bigger and bigger, and it gets to the point where you can't stop it.
Yeah, exactly. And so how are you going to stop it, right? You're going to stop it when it's, barreling at 100 miles an hour, or are you going to stop it, when it just gets going? It's much, much easier to stop early on than it is, when it's barreling.
Yeah, perfect. And then so once you have that pattern, then that way you can sort of make a system that you follow yourself, where you can, if you see these red flags come up, then you can sort of either change something or take action from there.
Yeah. So yes, in the short term, right? You can, for a lot of traders, just having greater awareness, greater recognition in real time says, all right, alarm bells are going off. Like, let's do something different. Let's disrupt the momentum of this pattern. You stand up, do 10 push-ups, come back and sit down. Like, that's better than not doing anything at all, right? But that's not really a solution, right? So the mapping of the pattern is like the first step to sort of see and have the vision, almost like creating a chart for your emotions, right? But the causality of them, right? That's where you've got to do some digging. And there's a tool in there that I call the mental hand history. And this is something that I created from poker. The name comes from poker, because as poker players, you would send a hand history of the hand of your play to a coach to get reviewed. And, so the kind of the equivalent of that to me is answering these 5 questions that are outlined in the book. And this is kind of my process for digging down and finding the roots, finding the underlying cause of your emotions, right? Because the anger, the fear, the greed, etc., they are all symptoms in a sense. They're signals of these underlying performance flaws. And so you have to have a strategy to correct those underlying flaws and deploy that in real time in order to fundamentally change your emotional reactions over time. So yes, we want to do something different in the moment to disrupt the pattern, but you need to have like kind of the axe in a sense to chop down this reaction. Because it's not like, I guess the way to describe it is like, it's a bit like kind of upgrading faulty computer code, right? You're getting a bunch of error messages on your desktop, and you're savvy enough as a developer to go in and figure out, okay, well, here's what's wrong. You fix the code, the error messages go away. You fix the flaws, right? The error messages of fear, anger, etc., they go away. But it's not like fixing code in which you can just kind of do it instantaneously. It's more like chopping down a tree with an axe, right? That's what this process looks like. And, early on, you're weak, your axe is blunt, and this tree is big, right? So you got to really have some strength in being able to see what's happening in real time. Then you got to sharpen your tool, right? Find the underlying flaw, find the correction that you can use to chip away at this thing. And maybe the tree isn't as big as you thought, and it can, get chopped down quicker.
Yeah, definitely. Can you give some examples that you yourself, or maybe some people that you've coached, have used to sort of help with these issues? Could be trading, could be anything else.
Yeah, I mean, like, I mentioned the expectation of winning every trade or winning every day or winning every month, right? On the surface, we can say those things are illogical because we know that the trading just doesn't allow for that to be true, right? So what would be, some logic that we can use to correct that flaw? I mean, an example of it would just be to say, no, like I don't live in a fantasy world, right? There's a lot of variance. I cannot control variance. I can't. It's just not possible for me to win, in every trade. What I want is to make sure that my execution is as tight as possible, right? So we would write that kind of phrase out, that was phrasing down, that logic down, and then you actually train it, like learn it, make it to the point where it's actually automatic in your mind to have that thought, because that thought needs to be powerful enough to cut through the emotion in the moment. Because again, what happens as the emotion is rising, it's shutting down the part of the brain responsible for thinking. So you can have your axe like ready to go, right? But the emotion is actually kind of fighting against you when it gets to be too big, right? You can be thinking in the right way and have it not have any impact, right? One of the worst sort of states to be in is aware of what's happening, but the emotions are too strong to stop you. And so you're almost like saying to yourself, like, no, don't, stay out. And then all of a sudden you're in this position. You're like, what the, how? That happens because the emotional system has gotten overactive. So when that happens, right, your ability to correct it is severely compromised. So you've got to, find it early, take that logic and apply it. For those listening, like what I just said is probably not that revolutionary. I picked a very sort of straightforward, simple example. What can be somewhat revolutionary is the timing of it and the fact that you've got to train it, right? Think of it like a skill. You're trying to, over time, upgrade this part of you that believes it's possible to win every trade, right? Yes, most of you doesn't think that, but this little error code back in the recesses of your mind is going to spring to life, right? As you, let's say win 5 trades in a row. It's like, oh yeah, I can, and then you just enter a trade that you're not supposed to, because you are assuming that you can win that next trade, right? So you've got to be able to recognize, the moments when, that error has kind of been exposed, to be savvy enough to then correct it. It doesn't have to be revolutionary. It just has to be very surgical in its application.
Yeah, definitely. I've seen some things like people just like write a phrase on their charts. So, it will go to every different chart they look at, which is obviously looking at all the time. So something as small as that, just to remind you of a certain thing or this or that, could be revolutionary.
Yeah. I mean, I think the key is if you find something and over a 2 to 3 week period, you're not actually seeing any decrease in the emotional reactions, then that phrase or that logic that you've written down is actually just a Band-Aid, right? What we want is to then peel back the layer, really understand the underlying flaw, and then your correction becomes much more surgical, right? And it's not just just chopping that weed off on the surface every day, every single day, which works, right? It's not bad, right? It's definitely better than doing nothing, but it's hard to kind of fully calculate the amount that these sort of like faulty programs running in the back of our mind can really kind of take us down. And, you know, again, I'm using kind of computer language as analogies here, but like, think about when your computer starts to get a little bit slow, right? You've got these resource hog type programs just like running. They're not even open on your desktop, but they're running, and they suck up bandwidth. They suck up resources. So this faulty logic, if you have to continue to look out for it, you got to have the logic ready to correct it, right? You're not as pure, right, that we want you to be in terms of your ability to react to the market, right? You don't want to have to be fighting yourself, you know, on the one hand, while at the same time, you know, fighting in the market because the market's competitive enough, right? So you over time, you want to resolve these underlying issues, and it is possible for them to go away. Right? It takes work to get there, but we don't want band-aids, we want solutions.
Yeah, definitely. I guess the thing with that is you can still perform very well with these band-aids, but if you want to be at the, you know, it might not even be the top, it might just be your potential. If you want to sort of reach the highest of your potential, then, you know, you'll have to do this.
Exactly.
All right, perfect. And then you said there sort of it can take up to 3 weeks. So would you say if you've done something for 3 weeks, it hasn't worked, would you just, you know, try new things and do it that way?
I would reassess your understanding of the problem, right? So in that time period, it's not just like try this and that's it. It's try this and continue to gather information about what's happening. You know, I think the biggest thing is that, you know, a lot of traders, they want to, you know, go have a drink. They want to just go for a run. They want to just, you know, get the hell off of their desk and disappear after bad days or after, you know, or even, you know, big winning sessions. And what you want to do is actually kind of capture what's going on in your mind as you're attempting to make these corrections. Because you are going to continue to learn more. And if it's not actually working, then you know, it's not like kind of it's not like a failed you know, attempt. If you've gathered a lot of information that you can then kind of take and kind of reassess, that's what you want to do. You know, it's taking a step back, looking at it again. You know, the book is really a guide to help you kind of match what you're seeing, right? The thoughts and the emotions that you're having with like the underlying roots. So we look at like the fear of losing, for example, right? There's, I think, 4 or 5 different underlying flaws specific to that fear of losing. Well, how do you know you've got the fear of losing? Well, I've aggregated a lot of the things that traders are saying to themselves and describing, you know, that particular problem in a way that's kind of very characteristic of what, you know, many traders experience. So, you know, there's lots of different problems, lots of different flaws, you know, kind of described in the book. And, you know, you can kind of use it as a resource to kind of match up what you're finding with, yeah, and get the answers you need.
Yeah, it's interesting. So it could, you know, it could be after your session with trading or a game, you'd sit back, reflect, could journal, write it all down. And then from there, you'd have that data to look back on it, reflect, and then for future, you'd be able to improve on it.
Exactly. And you can't rely on your memory, you know, as much as you think, oh, you know, I'm going to remember this. Dude, no way. Like you're going to lose some important details. And so when I have clients come to me for coaching, I have a questionnaire that they fill out. It's pretty damn detailed, but they actually have to fill it out twice, right? And the reason is they need to take 2 or 3 days before they look at those questions and look at their answers again, because you write down a bunch of stuff. It's like what's top of mind. You come back a few days later, and just because I've asked you those questions, your mind is gathering information. It's like, oh, wow, like now I see another piece. And I can't tell you the number of times where people have said, you know, just filling out the questionnaire was helpful. Like it's almost like worth the price of admission. We didn't even talk, and yet they've learned something about themselves because I've forced them into a process of self-reflection in a structured way. So yeah, don't rely on your memory because you have a limited capacity in the short term. And writing things down, it doesn't have to be like a 12-year-old diary, right? Like we're not talking about something that feels very juvenile, and we're talking about like understanding the nature of your own performance. If you want to excel, then what you're doing is no different than, you know, the NBA basketball player who watches game tape at the end of the day. Like, yeah, they want to dissect these very key moments, these key matchups. Like they're doing everything they can. So why would you not be self-reflective? The hard part about trading is where does that come from, right? You can get snapshots of your trades, but you can't get a snapshot of what's going on in your mind, right? That you have to do the work for. And that's what we're talking about doing.
Definitely. And would you say those reflections, they go to the positive or negative, like the extremes? Yeah.
Absolutely. Yeah. Because you want to be reinforcing things you're doing well, right? I mean, yeah, it's easy to just like kind of say, oh, well, I'm only going to focus on the negative because I want to get rid of that, right? And just assume that if I get rid of that, then I'm going to do more of this. Well, that's actually not the true. And there's research to show that especially for some people, right, reinforcing the things you're doing well is a big encourager for continuing to do that, right? And the easy way to identify yourself for that is if you've been coached. And if you're the type of person who really thrives on a coach who provides like positive feedback and the kind of the attaboys and the good jobs and all that stuff, then you need to be doing that for yourself, right? But some people are not that way. Some people actually thrive when they get kind of more of the harsher criticism and feedback. And, so, understand how you want to be coached and understand that you are your own coach too.
Yeah, definitely. That's great advice. So we'll sort of go on to your experience with coaching. So what are some of the most challenging situations you personally and sort of the people you coach have had to overcome? Anything you can say?
Well, I mean, for me personally, it's my own competitive aspirations as a golfer. I mean, it's kind of what drove me into this field of, failing under pressure. For me, I made the most of it. I turned it into a career and, can still get around the golf course pretty well. Clients, I mean, some of the most intense situations are, esport athletes trying to win major championships, in Dota, a game, in 2017, my team won the largest prize in esports, right? They won a $9 million first prize. And like, what did it take to win that? Well, it was sort of a double elimination bracket, kind of like the World Cup in a sense, but you've got kind of like the losers bracket where if you lose, you're out. Well, they were the first seed going into this. They lost their first match and now all of a sudden they've got to dig their way through the lower bracket, right? I mean, that was an incredibly stressful situation, but one that I was able to kind of help kind of right the ship very quickly and get them to win. I think it was 7 matches in a row to get to the finals and ultimately win that one as well. You look at, poker and having some of my players make the final table of the World Series of Poker main event. At that time, it's no longer the case now, but they had a 4-month break, so they could televise the final table live. And, during those 4 months, we had to go through some very deep analysis and preparation to get them, as mentally sharp as they could. And, we're talking about playing for, upwards of, $8 to $10 million. Traders, I'm working with, working with some of the institutional traders. We're talking about, hundreds of millions of dollars on the line, lives on the line. And you getting underwater in certain spots and finding the wherewithal to make decisions that are that have high conviction, that don't always have the same kind of backing from people around them, and being able to kind of stick to your guns, knowing that if you're wrong, your career is probably gonna take a step backwards, to say it lightly. Takes a lot of kind of guts. And I think when you're dealing with very high pressure situations, all the ones I mentioned are characteristic of that, right? It's really having a good understanding of what your weaknesses are, right? Mentally, technically, et cetera, so that you can very quickly assess, right? And the trader that I'm thinking of, in that spot, right? He knew that he was not delusional. He knew, right, that he saw something that others didn't. And he knew that because he was kind of able to check all the boxes of things that we had mapped. Like there was no kind of warning signs that he was actually in a compromised state. If you haven't done that work, you're kind of at risk of it showing up, without being able to control, have any control for it, but B, different than poker players and esport athletes where you do have more time, right? This was a trade that took, it wasn't happening and it wasn't like it was scalping, right? So there was some time to really kind of self-reflect and make sure, right, that, his decision-making was not compromised. So yeah, I mean, when you're talking about excelling at the highest levels, first and foremost, you need to know what your weaknesses are. And if you don't know what they are, they will come out and they will kind of undermine your performance.
Yeah, definitely. And I think, as you said, if he didn't have that understanding, then he might not have been as convicted towards it. He might have been convinced out of it, and then not receive that massive result, which I'm sure he benefited very well off.
Exactly.
Perfect. So Jared, thank you so much for joining the podcast today. I'd just like to go on to the last question. So
yeah,
if there's one message that anyone can take away from the book, what would you like that to be?
That emotional control is just a temporary solution, right? I mean, I think it's been the aspiration for many people to be in control of their emotions, right? Put them out of the way, make them not an issue. We actually want to flip the script and say, no, actually the goal that you're after is resolution of the emotions that cause you problems, the emotions that compromise your decision-making. If you do that, you actually free yourself up, right? Your performance actually has the ability to progress. Your potential has the ability to progress in a way that can be somewhat transformational, right? I'm not saying it in a kind of a, esoteric way. I'm saying it in a very pragmatic way. When we look at the types of traders that I worked with over the years, they're often surprised by, how much greater clarity they have because they're not fighting themselves anymore.
Perfect. So yeah, Jared, thank you so much. So where were the best place? I know they can grab the book on Amazon and you have a website as well. Would that be the best place to get in contact?
Yeah. So jaredtendler.com. I'm pretty active on Twitter, at Jared Tendler. The book's on, audiobook, ebook and softcover. Pretty much wherever you buy books, you'll be able to get it. And if you can't get it that way, just contact them because I'm sure they can get a book for you. But yeah, it's pretty much everywhere.
I'm sure it's doing pretty well then if you can't get it. All right.
Yeah.
Thank you so much for joining the podcast.
Absolutely. Good to see you, man.